we get to see on our previous discussion that we need to consider price imbalance for anything like our high to be our supply zone. So what we are looking at now, we need to ask ourselves, where did all this price imbalance start? And we get to see that the price imbalance actually started here, because we get to see that here we have something that we can use as a point of reference. So price imbalance actually started here, and then we expect price to come back and fill in this price imbalance that we have here. So since and then we see that price now is coming up, and it failed to actually come to our supply zone to actually fill this price imbalance. It sort of feel like 75% of it, we can say. It did not fill the imbalance, all of it. So we get to see that we have a failure to retest here. And having a failure to retest to your supply zone or to your demand zone, it actually indicates that the next move that you're gonna see, it's gonna be a shoot here. When the price gets here, it's gonna drop a little, it's gonna drop down with a shoot, okay? Because we get to say now this zone here that we see here, this high here, so the market will just come and fake out, and does a fake out. Some people say it's a fake breakout or whatsoever they call it. So we get to call this zone here as a fake out zone. So we get to see price doing the fake out thing, and then we see price going down. Let me check this. Why? Okay. So when we get to see our FTR or our failure to retest, it's some sort of a validation that our supply here, it can be trusted. And when price gets here, it's gonna really drop. That's where we get to see price shooting. Because the way the market moves, we need to understand that there is a shoot and compression. That's how the market is moving. When price is approaching to a significant level, we need to see compression. As you can see here, price is going to a significant level. That's why it's compressing. And then after compression, we need to see a shoot. And as you can see here, price has been doing the same thing. You get to see here that price has been compressing and then got to a significant level. Probably it has something here. We got to see that we have a rejection block here, but it's not part of this discussion. So I'm just mentioning it so that we get to know why price get to drop here. So we get to see that price is moving with compression, follow a shoot, compression, follow a shoot. So all this time around, we get to see that price now it's moving in a compression. So when price is moving in a compression, we get to ask ourselves, we get to, let me say, we get to have an idea that price is going to a significant level. So compression indicates that price is going to a significant level. So we get to see that now price begin to fake out here, and then we get to see price going down. Okay. So I hope this is clear. It's something that is very easy. So now what we're gonna do here, we get to see that we have our low here. But if you look at here, we have this candle that is part of our low here. That is very raw. It's very long. So what we need to understand now, we need to come and pull our fib. If we get to see something that is very long like this, we get to see a candle that is very long like this, we don't indicate this area as our demand. What we get to do, we come to this long candle like this, and then we get to pull our fib here. And when we pull our fib like this, from the low of the candle to the high of the candle, we get to see that we have our equilibrium here, which is gonna be 50% of the Fibonacci. So we can say this is discount. So what we are expecting now, we are expecting the institutions to start buying here. When they get here, we expect the institution to start buying because they can't buy here. The reason is that is because price is gonna be offered at an expensive price. Okay, it's gonna be offered in an expensive price. So we need to see price going a little bit to discount. So here price is gonna be offered in an expensive price. Let's just mark the whole zone, although I didn't even go to smaller time frame to look. But I'm just highlighting that once you see a long candle like this, what you need to do, you need to pull your fib like this, pull it here, and then you get your equilibrium, which is your 50%. That's where we're gonna be having our discount. Okay, so price has a tendency to come here a little bit and then it begins to turn. So when you see a long wick like this, long spikes like this on a candle, just do what I told you. Don't try to indicate or look for something here that you can use as a point of reference to say this is your demand zone. Nope, just go and do what I told you. So this is what we have, and this is what has been happening in the market, and a lot of people are not aware of it. So let's just change this. Oh, let me just I think I should just go to 30 minutes and see if we can get to have something that we can use or something that we can point out to say let's look at this here. Okay, we get to see that we have something that we can use as a point of reference here. So we get to see that we have our FTR here. We have our FTR here. Simple stuff. We have our FTR here, and this is gonna be our fake out zone. Price started to shoot here and then came back, feel a little bit of this void that was being created, but it didn't feel all of it. So it created an FTR, which is simply means failure to retest this supply. So now we get to see price going and going and going and going. When we get to see price coming here, it's gonna come and then spike this level, and then we get to see price dropping. Okay, so that's what we expect. So I think I'm clear about that. So now let's go to 4-hour time frame. Okay, 4 time. Let's go to daily time frame. So on daily, I just wanna highlight something that I hope a lot of people are aware of it, because the way I view the market, it's a little bit different from anyone. So now let's talk about what we get to see here. Let me pull my fib and see if I can have an optimal entry level here. So I just showed you what I wanted to show you. So now you get to see that we have our optimal entry here. So this is an entry where the institution, they are likely mostly to anticipate a sell move, and indeed we see price going down. But this is not part of our discussion. Let me just pull it out a little bit. It's just disturbing us. So now let's talk about this. We get to see that we have a shoot in the market, and if we look here, we have this leg that we have. So we're gonna drag it like this. If you don't understand anything that I'm highlighting here, you need to go to the previous teachings and watch everything. So we get to see that there is this void that has been created. Price has created void. So this is price imbalance. Price needs to come back and fill this thing. So we get to see that we also have our equal highs here. Failure to retest this thing. So retail traders will be telling you that, oh, this is I don't know how to call it. This is a resistance or support. I don't know, whatever they call it. So they're gonna say this is a strong support or resistance, whatever it is. And then when price come for the third time here, they're gonna think that price is gonna drop. And what happens? Price get to go up, and then we see price dropping. And then when they see price dropping like this, they will say price actually fake out. They say it was a, I don't know what they call it, these retail traders, these things. So but let's leave it because I forgot the stuff of retail traders. So this is the little that I remember, because I can be able to explain it in a way I understand institutional trading. So this is why this is one of the stuff that I've picked out of the retail trading concept, out of the retail trading world. So we get to see that price came here, we have our supply here, price came, and indeed price sell. So price just sold when it gets here because we have our supply. All along here, we get to see that we have this void, this price imbalance. So price came back, fill it in, and then we get to see price dropping. So this is the thing that we have, and this is the thing that we need to understand. How price is actually moving, okay? Price is not being moved by any lines that we draw. We need to understand what price is doing when we look at price. So without any waste of time, I think I should call off our session. Now I need to have a little bit of rest and stuff like that. So, but I wish you a nice trading week. So remember what we discussed here. I think we're gonna have an opportunity here, but we discussed that one. So you can be looking forward to everything that I've showed you. All the best, guys. All the best. All the best from me. I'm signing out.